So, like I said, ladies and gentlemen, this is a 3 days training that is going to be talking about how you can, number one, understand strategy and how you can put that strategy into an automated system and how you can use that automated system, on your, how you can backtest it, how you can deploy it on a VPS. What is a VPS? How does it work? We're also going to be talking about FS Dreamer. All right. So today we're going to be starting with understanding what strategy is, how it works, and tomorrow we're going to go on to understanding how to put that strategy into automation, how to automate that strategy. You understand? And then I'm also going to be sharing tomorrow. I'm going to be sharing a lot of a lot of information on how to backtest, forward test, run on demo, how to put it on a VPS. These are very, very simple things I'm going to be teaching you tomorrow. And then by Friday, by the time we're going to be having Mr. Obin all the way from Abuja, we're going to be talking about how to use FS Dreamer to also, do some fantastic things when it comes to automation. Now, I need you to pay attention to this because it's very, very important. I'm going to be doing a video very soon, probably by tomorrow, where my team and I were working on a fantastic video that talks about what makes a broker the best. All right. EBC is what best broker. It's not because we just want to get that title or no. The reason why we are what best broker is because of a lot of reasons. Number one is, of course, we offer the best when it comes to leverage, liquidity, spread, and a lot of other things. But that's a lot of brokers are offering that. But what makes us stand out is two major things. Number one is the fact that we are completely and 100% a broker, which means we don't do book B, which means all your trades, whether by AI or by you, they are all routed directly to the markets, right? And number two is the fact that we are bold enough to tell you, you know what, whether you want to trade manually or you want to trade automatedly, even though we don't provide the automation apart from the EBC Turbo, which is, a platform that tells you, gives you some intel about trade volume. We don't give you EAs. We don't. So this program is not a program where you're going to be getting EAs or even I'm going to be sharing some of my personal that I use personally, and I'm going to be telling you how to backtest it and how to use it, and but we don't give EAs as a company, right? ABC doesn't give EAs, right? So let that be clear. But we encourage people to use it. We encourage traders to say, you know what, you want to use it on the platform, go ahead. We don't have an issue with it. We have a very sophisticated platform. No matter the EA you're using, it's going to work. It's going to give you the results that it has been programmed to give to you. All right. So all the ones we're going to be talking about, all the ones we're going to be building together, all the ones I'm going to be sharing with you personally, there are things that you can test, you can run a back test, you can use on the demo, and of course, you can actually deploy if you feel they are fine and they are okay and you are good with the risk management. All right. So we're going to be kicking off right now with Mr. Sadiq. I want to quickly invite the regional head of EBC, Mr. Sadiq, who is going to be taking us on this first section. So, Mr. Sadiq, you have the floor. Please take it away.
Yeah, thank you for that good introduction, David. And it's good to have everyone here. And thank you for joining today's session. So today, um, we're going to explore a topic that is reshaping the global financial markets. So it's called automation in Forex. Hold on, please. Let me share my screen. Yeah, so before I proceed, I know some of our clients here are sad about the match yesterday. Unfortunately, Barcelona lost. We're a very proud sponsor of Barcelona. And I don't even know whether I should be happy or because I'm a Chelsea supporter myself, but I'm working with a company that sponsors Barcelona. Well, either ways, it's a learning point for Barcelona. I'm sure they're going to come out of it stronger. Yeah. So can you see my screen, please? Okay. Yeah, so my colleague David has already mentioned the program for the 3 days workshop, how it's going to start. And the one we'll be looking at automation in Forex trading. I'll be doing a quick introduction about the automation in Forex trading, what it's all about, things to, you know, that'll pique your interest. So day two, we'll be talking about professional EA development, optimization and deployment, which is going to be anchored by my colleague, David Precious. And day three, we'll be looking at FX Dreamer EA Builder plus intermediate automation. So this is going to be held by my colleague in Abuja. It's going to come all the way from Abuja to give us this beautiful presentation, Obina. Yeah. So the agenda for today will include the introduction, of course, the core mechanics, key benefits, the technology to look at, the risks, future trends, implementation, strategy, case studies, and of course the conclusion. Yeah, so to appreciate where we are today, it's important to understand how trading evolved. We started with fully manual trading, where every decision was made based on human judgment. Then came automated trading, which consists of the use of algorithmic trading. That's the mathematical models to guide our execution. But through the journey, we traders, we've had to endure a lot, physically, psychologically, emotionally, especially we those that trade 24/7, always on their screen, trying to like get results out of the market. It hasn't always been an easy journey. You might have a very long stretch of wins. You're making profit today, tomorrow you're making profits, throughout the week you're making profits. And there comes a day in the market that wipes out all the profits you've made, and you're wondering that, wait, what's going on? What did I do wrong? Is my psychology messed? Didn't I follow my setup? This and that. You're going back and forth trying to find a solution, like, oh, what happened? Trying to like find the root of the crux of the problem. And it has not always been an easy journey, I must say. Yeah. Then came an era of automated trading. Automated trading is strictly auto. There's no psychology. There's no emotions. Rather, I would say emotions. There's no emotions attached. It's whatever you tell the EA to do that it does. Buy from this level, it buys. Sell from this level, it sells. You know, you are not having to do any manual monitor. You are not having to monitor your position all the time. Yeah. So on my screen, you can see the timeline of innovation. Starting from the 1980s, where we have the floor trading and phone orders. 1990s, we have the electronic platforms. 2005, we have retail algos. Many traders have many retail traders are already making use of leverage by this time, using MT4 and the likes. So in 2025, we are looking at AI and machine learning. So you can see the timeline of innovation. It's advancing, and it's just going to keep advancing like that. Yeah. So how does algorithmic trading, how does it work? Uh, into the do what programs are we inputting? These are the things we are going to look at today. So look at the logic processing, decision, and the execution. Yeah. So what we call EAs, I know most of you know it as EAs, but it's actually called expert advisors, also known as trading bots. Yeah, so EAs are scripts written primarily for MetaTrader platforms. They monitor the market and execute trades based on coded instructions without any human intervention. So, what are the key characteristics? You know, they run locally, or on you can run it locally, or you cannot run it using VPS. This is a very critical line that we are going to be looking at in the later stage of of this program. So, we have another characteristics is that it's highly customizable. You can customize it. You can tell it what you want, and you can tell it not to execute what you don't want to execute. So EAs are strictly rules driven. They are rules driven. It is whatever you tell it to do that's going to do. It won't do otherwise. So it can trade multiple pairs simultaneously. We humans, we might not have the capacity to look at multiple platforms simultaneously. But with an EA, my brother, you can open as much as 50, 100, 100 pairs at the same time, telling the EA what to do, and it's going to execute the orders according to the instructions given to it. So, and we know EAs are becoming dominant in the retail markets, not just the retail markets, the institutional markets as well. So another form of automation is what we call the social and copy trading. Yeah, we call it automation because you don't have to do anything. It follows repetitive orders from the primary provider of the signals. Like it's replicating the actions of a master trader. So when the trader buys, it buys, and when the trader sells, it sells. So this is an automation. You do not have to sit to your screen and be involved. The only time you have to come is to know what your balance is, how much you've made for the day, and stuff like that, or maybe to manage risk. So we'll be looking at another aspect rather of automation is the institutional HFT. HFT is called high frequency trading. So this is a very, very interesting aspect of trading itself because it involves advanced level of trading. It's not the regular trading we know because it's actually refers to a type of algorithmic trading that uses powerful computers. The execution is ultra fast, and the execution is ultra fast, and we are looking at orders being open in milliseconds, not just microseconds, milliseconds, and this kind of trading can open like multiple positions at the same time. Can open like 100 positions per second and close it within the next second, generating lots of volume, imputing lots of volume in the markets. And this strategy is basically used by top institutions, hedge fund brokers, that's they are volume driven, volume oriented. They don't just look at making profit from the market, but their target is actually to generate volume and make money as a result of that. So the part three of this, we'll be looking at the core benefits. Core benefits of automation is speed. There's a level of speed like that automation will do that humans cannot name. We can't comprehend because when you give an instruction to a bot and tell the bot that this and this and this, immediately that setup plays out. Instantly, it's taking the execution without any approval. It's not seeking approval from anybody, from any anybody in any form. It's immediately executing that trade, and this is kind of reflex that we humans do not have. I've been a trader for so many years, and at times my setup will play out, and I'll still be contemplating, should I enter this trade, should I not enter this trade, until probably the trade moves in my direction, and I've lost a certain amount of pip value, and I'm entering the markets at a later price, and this is the advantage of using automation. It's also minimizes slippage. You can even go as far as imputing the maximum slippage you want to execute a trade at. That okay, if a trade is reaching a slippage of so pips, do not execute, and it won't execute. Fortunately for us at EBC, we do not spike markets, or we do not have very absurd slippages in normal market conditions. It doesn't happen like that. Yeah. So another benefit is that 24/7, the EA is running. Whenever the market is awake, the EA is awake. The EA is doing what you programmed it to do. It's not you can go for parties, go for meetings, enjoy yourself. The AI is doing what you've programmed it to do. So that's automation for you. This is a very strong benefit of automation, because as humans, we can't always sit at the screen. We have a life actually before trading. We have families before trading. And as humans, if we are allowing trading to take the better part of us, we are going to lose our human touch and reasoning. So introducing automation has really made trading more social, more you know easy, easier for us as humans. Yeah. So of course, a major benefit is that it removes emotion. I'm not being emotional about a certain setup, or I'm not because of my fear or because of my greed. I'm not making a decision. I'm making a decision with my clear head. The EA is making a decision with clear insights of the markets. You've already you've told the EA what to do. So there's nothing like fear. There's nothing like greed. Your risk is being managed to a considerable amount of size. So you are good. You understand. Yeah, you can tell the bot that, look, per trade, I'm not willing to lose 1% per trade. And that is what you're going to get at the end of it. If peradventure the market goes against you by less than 1%, it will take you out. You are safe. Unlike humans, I'm sure most of you can relate to what I'm about to say. You know, the market is going against us by 1%, but we still believe at the back of our mind that no, 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 it will retrace, it will retrace. 2%, the market is still going against us, but we're still saying it's going to retrace 3%, 4%, 5%. Eventually, you are getting to like 50%, and you are losing a whole chunk of your capital. And at the end of it, you just have to accept defeat and close the trade. This is an advantage the EA will not do. It will not let the trade run in such a loss. When you tell the EA you want the trade to close at a loss of 1%, it does that without thinking twice, without collecting permission from anybody. So that's a very good benefit. So backtesting, yes, EAs help us in backtesting our strategies, because when um, when we input all our information, all the codes we tend to use, one advantage is that we can go to our MT4 or MT5, whichever one we use, and we can backtest this strategy as far as whatever history is on the MT4 or MT5. We can know, okay, during what certain market condition the EA works best, and which market condition the EA fails. So we can know all these by backtesting. As humans, we also do backtesting. We can go as far back as a month, a year, trying to see how our setup played out during some market conditions. We have very volatile market conditions like NFP, FOMC. We want to look at how our strategy is going to fare during those periods. So we do a back test. We go as far back as whenever to just see what happened and whether our strategy will actually survive Yeah, so that's actually the benefit of a benefit of using automation. So yes, discipline and consistency. Yeah, so it's the rule adherence, the replicability, risk control. That's the disciplinary part of using automation. You know, you have I used to have a friend. He was an aspiring hedge fund manager. He was very big at it. He managed over $2 million in assets. So unfortunately, things went bad for him. Or when things started going bad for him, he was always trying to like have a break, always blaming everything on his psychology. Oh, I need to do this, I need to do that. He was a manual trader. He never used automation. You know, he would travel for like a week, come back again, trade, and maybe have 1 or 2 days of good trades, and maybe the next trade he takes, he loses all the profit he has made again. And it's always like that, back and forth. And it's he started blaming himself that I think I lack discipline, I'm not consistent, I'm not this, I'm not that, trying to like, yeah, but the problem actually is not always all about psychology, always all about the emotions. You know, it's more it has to do with your trading setup. How viable is your trading setup? How far have you back tested your trading setup? How profitable is your trading setup? And how what is the risk to reward of a trading setup? If you have a strategy that the risk to reward is very wide, very absurd, my brother, you're going to have problem in the markets. And that's the problem with most traders. And the good thing about automation is that you can always have a very decent risk to reward setup in the market and automate it all the time. And 100% of the time that setup plays out, you're going to get a very good risk to reward. Even if out of 10 trades, you only make, out of 10 trades, 3 trades go your way, you make profit in 3 trades. My friend, you're going to be in profit. That's the benefit of having a very good risk to reward. And these are areas we'll be looking at as we proceed. So yes, diversification. Like I said earlier, as a human, we can only go as far as varying 2 to 4 charts at a time. And unlike the automated system that can monitor more than 20 currency pairs simultaneously, you can put more than 20 currency pairs on your charts and give each currency pair different instructions, and it will execute and give you your desired results. So that's one very good thing about automation. Yeah, of course, data processing, as a human, there's so little or so much data as a human, as we humans can process. When you're looking at fundamental, you're looking at technical, you're looking at all this together, merge everything together, my brother, you are having a very yeah, giving yourself a lot of work to do. You're stressing your head, stressing your brain, and it's almost very difficult for you to like get accurate results when you're just doing this by yourself. But with EA, with in microseconds, you're analyzing, you're breaking down all this information, breaking down all this big information just to get a very good setup. And pattern recognition, when it comes to pattern recognition, you have to give it to automation because as a human, no matter how far you've traded in the market, how long you've traded in the market, at times your setup will play right in front of your eyes and you would not know it's your setup. You'll still be wondering, is this my setup? You'll be doubting yourself, and that's due to fear. But with automation, when a bot recognizes the pattern, it takes quick decision on that pattern and executes accordingly. It doesn't waste time. No matter how complex the pattern is, it will execute. That's one of the huge benefits of having automation. Yeah, and of course, when we compare manual trading and versus automation, look at the first line, for instance, the trade execution. The first line represents the manual trading, while the green line represents automation. So, and this is in terms of speed. How fast is automation compared to manual trading? And we're talking about 50 milliseconds, less than 50 milliseconds. Yeah. So in automation, there's this notion that, you know, the lesser the latency, the faster it is, and the better it is, rather, the better it is. And along the line, you'll understand why speed is very crucial for trading. It's extremely crucial when it comes to automation, when it comes to trading automation. Very, very crucial. And the monitoring capacity, like I said earlier, you can monitor four charts as manually, while automation can monitor as high as 50 charts in the market. So yeah, part four, we'll be talking about the technological aspects of automation. Yes, the standard platform or application many traders know is what we call the MT4 or the MetaTrader platform. So it consists of both the MT4 and the MT5 um, platform, and it's widely used for retail algo trading as well. It's very easy to code an EA on both MT4 and MT5. And if you understand the C++ based language, yeah. And there's a marketplace for EAs. And hope most of you know that by the time you finish this boot camp that we're having currently, you can as well make money just by selling EAs. Forget about the trading part of it. By the time you're done, you would know how to configure an EA and you would know the retail part of benefiting from having this knowledge. It's a very, very critical knowledge. I have a lot of people that sells EAs. Some go as far as selling for like $1,000 to $2,000 per EAs, depending on how efficient it is. So having this knowledge is very critical for us because it can help us not just in the trading aspects, but also the business aspects of it. So, yeah. So another technological infrastructure that is very critical when looking at automation is known as the VPS. And the characteristics of a VPS is that it can run 24/7. While yeah, it can run 24/7 and it does not sleep. Does not sleep. And there are some VPS that have very ultra low latency. That is that very, very fast. They take you very close to the broker server itself. And if your broker server is located in UK, for instance, there's some VPS that will take you that'll give you a location very close to your broker server, regardless of the location. And these are data centers scattered all around the world where servers are being used to generate price feeds for the market. And like I said, when you look at speed in automation, it's like comparing it to the Formula One race competition. I'm sure most of you are familiar with how technology has evolved in Formula One, for instance. Um, yeah, in Formula One, the distance between a car, the distance between two cars is not measured in meters, it's measured in seconds. In seconds. So if you are having a 1 second distance from car A to car B, so it's like telling you that if car A stops in 1 second, car B will overtake it. That's how critical speed is in Formula One. I'm trying to relate it to how critical it is in automation. And when you have a pit stop in Formula One, for instance, it takes you less than 20 seconds, within 10 to 20 seconds, to fill in over 100 liters of fuel into the Formula One car and change the four tires at, at a go, less than 20 seconds. My brother, if you put that in real life perspective, man, if you have to buy over 100 liters of fuel and change your four tires in real life, you'll be canceling a lot of appointments that day because it's going to take a lot of your time. And this is how efficient a VPS can be for us in automation. Yeah, many of you do not know how critical speed is until you get to that level. You know, there's this movie, I can't remember the name of this movie. You know, a hedge fund had to pay over $500 million just to reduce its latency by like 10 milliseconds. Just 10 milliseconds, that would be like $500 million. It's connected a straight wire from its server to the main liquidity server. So a straight line just to reduce its latency by 10 milliseconds. So in fact, I have a programmer friend that subscribes for a VPS with $5,000 every month. Sorry, £5,000. It pays £5,000 every month. I'm sure most of you are like shocked, like, what am I saying? Because most of the VPS we know is just like $10, $4, $20. But I'm sure most of you are shocked to know that that VPS that's worth over £5,000 and $5,000 every month. And these are VPS that has reduced latency to the barest minimum and are giving you very, very good execution. Yeah, so that's just for you to know how critical speed is in automation itself. So for advanced traders, we look at what we call the Python and API flexibility. You know, we look when we look at fixed API, for instance. Fixed API is financial information exchange application programming interface. Yeah, it's like a bridge. It connects you as a trader to liquidity directly. It bypasses MT4, it bypasses MT5, MT4, MT5. It gives you a straight connection to liquidity. But of course, this is not used by regular retail traders. They are used by hedge funds, institutions, banks. Yeah. But notwithstanding, in EBC, as a retail trader, if this is what interests you, we'll be happy to like configure this setup for you. We'll be happy to configure this setup for you. It just comes with a cost, not too much. It comes with a cost, and we'll be giving you direct access to liquidity. Yeah. So connectivity and latency, I've spoken so much about it, so I'm just going to skip that part. So we look at the risk and challenges that comes with automation. So automation is not foolproof, and it's very important we know this. And internet disconnection at any critical moment can, make us not or that is if we're not using VPS rather. If we have internet disconnection, we can have errors in our setup or errors in the configuration, and we might have to start again, and the whole cycle goes on and on. So yeah, the broker server crashes, which is very unusual, but in some cases, broker server crashes, and it causes disruptions in the coding system. So we look at coding bugs causing runaway orders. Of course, these are areas where our experts, Mr. Obinna, is going to like pull us through how to like avoid having bugs and how to like detect it before execution. So API updates breaking existing code, blah blah, and the likes. So yeah, many of us have these myths at the back of our mind that when we have when we have a trading bot, all we need to do is just to set it up and go and sleep, and that is all. It's very important for us to know that automation also requires supervision. You are the pilots, the bot is the autopilot. So you must monitor for anomalies. And this is very critical because we have different market situations, different market conditions, and different bots works differently in different market conditions. Like when you have an uptrend, for instance, it's very important to know that, okay, when I have a bot, I'll rather configure this bot to be buying because why? The market is an uptrend. So whenever I see a buy opportunity, this bot should always execute buy orders. But we know that the market can reverse at any time. So this is why monitoring is very, very critical. And in a ranging market, for instance, we can also take advantage. There's what we call a martingale EA. Martingale EA, executes position as stacks position according to the movement of the market. And we all know that martingale EA strives best at ranging markets. When you have a martingale EA, the best time for you to use a martingale EA is during a ranging market when the market is going up and down within a specific price range. And we all know that's the best time. But when you're running a martingale in a trending market, for instance, the market is just plunging down and you're running the martingale, the martingale will keep buying until the retracement happens, a very major retracement that happens and takes away all the losses and puts you back in profit. But we can't always tell how far a trend will continue. So that's why human oversight is needed using automation. And that is why risk management is also very, very important. And of course, in the maintenance part of the EA2 is very crucial because the meta traders them are releasing updates on their software which might affect your trading bot too. So you have to always follow the updates and make sure that you are adapting to the corresponding updates coming. So we look at future trends and AI. And we can. I'm sure with the look of things, we can see that even we can see that automation is evolving. We're getting past the stage where we have to use algorithms. We have to tell the EAs that, okay, when you see this pattern, do this and do that, do this and do that. There's what we call machine learning, and this model, helps us interpret information very fast and execute orders for us. Now that's when we like implement it into trading. So machine learning is very important. And along the line, I'm sure when we go when we go or when we evolve, like when we're done with algorithmic trading, this is going to be our next focus, how to use AI to trade the market live, not just using AI to build bots. Yeah, because I got privy to an information from a colleague in the industry of a company that uses artificial intelligence to trade, as in it's integrated its MT4 and MT5 to ChatGPT, the real and ChatGPT practically is the one executing trade on its behalf, and it's fantastic. The results were phenomenal, and we're getting to a point whereby we are going to merge both algorithmic trading and AI together to give us very, very good results. Yeah. So we know reading the news, it can be very difficult to interpret the news. At times many people say I'm a fundamental trader. I only trade when the news happen. I only trade blah 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 blah. At times, interpreting the news can be very, 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 very difficult, And when we implement AI and automation, they can break it down for us, tell us what the sentiment of the news is and what direction um, 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 prices will actually go to as a result of the news. Yeah. So market dominance. We have 89% of global trading volume that is driven by algorithms. So it's very important for us to know that institutional algorithms now account for the vast majority of market liquidity. Yeah, and I'm not surprised about this. Yeah, you know, we are seeing volatility in the market, and many of us think it's just one human sitting down at the back of its he or his or her computer executing orders. No, it doesn't work like that. These are algorithmic institutional algorithmic trading softwares like doing majority of the volume in the market and giving us volatility where is needed in the market. So it's very important for us to join this trend and be part of it. So the implementation guide, this is the parts that's very, 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 very critical for us because we want to know what kind of strategy works best in automation. And I'll be happy to tell you that there's no strategy that cannot be automated in trading. There's no strategy that cannot be automated in trading, and it's um um it's very difficult to know. Sorry, it's very important for us to know um our niche in this space. Are we scalpers? Are we trend followers? Or do we prefer using the martingale? And if we fall under any of this category, how best is it for us to implement it? How best is it for us to code all these strategies? These are the things we'll be looking at going forward now. We'll be looking at the charts, we'll be looking at different strategies, we'll be looking at how different strategies can be automated. So I'm going to hand over on this note, I'm going to hand over to my colleague Ayodeji. So he's going to join us and he's going to show us different strategies. Yeah, so this is the part I really want us to pay attention because I know many of you are expert traders already, and you might be learning a new strategy. Whether we are experts or beginners, we might be learning a new strategy. And so it's very important for us to pay attention to Ayodeji. Ayodeji has been trading for so many years in the industry. Many of us know him in this forum. Many of us know him. And so I'll be handing over to him to take it up from here. So after his presentation, I'll be coming back to discuss. All right.
Thank you very much for your part. So what we'll be doing right now is we'll look at a simple strategy that I have used for some time. If you have been following, you would see that the step to automation, for automation, it goes step by step. The first step is that you must have a strategy, okay? And then once you find out that that trading strategy is consistent, it works for you, you can then proceed to automate it so that you can take away the human aspect, to a larger extent. And then the EA or AI will just be trading that particular strategy that you are programmed. So when we say strategy, what is a strategy? A strategy is like a set of instructions that guides you. Okay, like you are going to a destination, you use Google Map to tell you go forward, turn right, there is a junction, stop here, this and that. Those are a set of instructions that you need to follow in order to get to your destination. When trading, you don't just open the chart and buy or sell. There are a number of things you need to see. Now, those things, they range from trader to trader. Okay, some trader may say, okay, if I see ABC, I will buy. If I see BCD, I will sell. That's it. Some others will see, they'll see only A. If they just see only A, it's enough for them. Some want to see A, B, C, D, E. once they see A, B, C, D, E, they decide to trade, buy or sell. What we are going to look at today is a simple strategy. We would use two indicators. The first is RSI and the second is stochastics. They are both oscillators. Now, I'm sure we can see my chart. If you can see my chart, I have a chart. Now, if you can see my chart, just type yes on the chat box there so that I can continue. Okay. If you can, okay, that's fine. All right. So I would start by adding the two indicators. I just said RSI, Relative Strength Index, and then stochastics. So insert indicators, oscillators, and then Relative Strength Index, RSI. Now, let me reset it. Normally, once you have your RSI like this is how it comes. Okay. The RSI is, you see it blue, like it's light blue, and then it has two levels. If you check here, if you check up here, you'll see that there are two levels. One is 70, while the other one is 30, 70 and 30. Okay, this is the default RSI, but we are going to change it, okay, because for the particular strategy that we are working with. Yes, thank you. I've gotten a message that you can see my screen. So for the particular system that I want to talk about, we are not working with 70 and 30. As a matter of fact, we are working with 4 different levels. Okay, so I will go to the settings of the indicator. I just double click on the indicator and I'll click on add. Okay, add 2 times. Now this 30, you can see my cursor on 30. I'll double click and then I'll write 20. Now what I'm doing on a system, you can also do on your phone. You can also do on your phone if you have a separate phone apart from the one you're using to join this session now. If you have another phone, or if you can minimize, okay, so that you can, if you have a phone that can multitask 2 different windows, you can join in what I'm doing. Okay, so I'll take it a bit slow so that I won't be too fast. So I'll just change 30 to 20. That's the first thing I did. Now 70, okay, I'll change this to 40. 20, 40. Then these two zero now, these two levels that I just added, this one will be 60. And then 80. So from 2 levels, I've added 2 additional levels. So now 20, 40, 60, 80 levels with relative strength index. This, we are still in the first indicator. Okay. So this is so let me just change this. I'm using MetaTrader. This is the trading platform. MetaTrader 5. This is MT5. Yeah, but so you can use the same MT5, whether your desktop or your phone. Okay, that's mobile, anyone, it will work. Yeah. So this is how it will look now. Okay, you can see the difference. From that, you are no longer seeing 70, 30, but it's now showing 80, 60, 40, and 20. Okay, 20, 40, 60, 80. Now, note this. In an uptrend, this RSI, it will find resistance. Resistance means the market was going up. It stopped going up. It started dropping. So that's resistance. Let's just call it R. In an uptrend, it will find resistance at 80. Okay? Resistance at 80 and support at 40. Let me write it this way. Resistance R at 80 and support. That's where you should be buying, okay, at 40 level. This is in an uptrend. That's when the entire market is going up. Is that clear? 80, that's resistance, where you look to sell. 40, support, where you look to buy in an uptrend. In a downtrend, we are working with the other two levels. Resistance, that's for sell at 60. And support, that's where you will buy. In a downtrend, 20. 60, 20. So this one is for sell. This one is for buy. This is in a downtrend. How do you know an uptrend? How do you know a downtrend? By simply using our eyes. Like now, if you look at this market, you know that this is a downtrend. Look at how the market is coming down. You know that this is a downtrend. Now let us analyze if it is true. Now that we've said a downtrend, so we are working with this 60, 20. Let us see whether anytime the market gets to 20, whether the market picked up. And anytime the market gets to 60 or around 60, whether the market dropped. That's what we are looking at now. So let me take this off. I hope we've taken this off because I want to take it off. So we are in a downtrend from here. At what point did the market get to 60? This is 60. And this is 20. At what point did the market get to 60? Right here. Market was in 60. What about 20 here? Even here, the market did not get to 60. It didn't get to 60 exactly, but it was close to almost 60. Okay. So we have how many now? 1, 2, 3. And you can see at this 60 here, that's here. If you trace it up, 60, what happened? The market sold. Sell. Don't mind me the way I'm writing this thing. Look at how the market sold all the way down to 20. But the moment the market got to 20, what happened? You can see that it found support around this level, and then it started buying. It bought all the way up to this candle here, where RSI again became very close to 60. That's another sell signal. So it's telling you don't buy again. No, RSI has gone to 60, and we are in a downtrend. So can you see the set of instruction now that we said a strategy? So you have it at the back of your mind. In an uptrend, 80, 40. In a downtrend, 60, 20. Okay, so 80, the higher number is for sell, the lower number is for buy, depending on the trend. In an uptrend, you are working with 80 to sell, 40 to buy. Or in a downtrend, when the whole market is collapsing, is dropping, you're now working with, you're no longer using 80-20, 80-40, you're now using 60-20. So because this market now, this one in front of our chart is a downtrend, that's why we're using 60 and 20. But you know, the market will not continue selling forever. It will get to a point, it will now start buying. The moment it starts buying, just pretend that you don't know what 60-20 is. You're now looking at 80-40. Okay, when the market gets to 40, support, you now look for signal to buy. And when you now start buying up, you now get to 80. What do? That's a warning to close your buy and start looking for sell. Okay. Now let me clear this. Let us look for an uptrend. Now, I believe we've seen this downtrend enough. Now, this is an uptrend that just started. This is the live market now I'm looking at the euro. It's a live market. Now, what do you notice from here? From this place where the market stopped selling. The market stopped selling around here. Okay, we were in a downtrend before like this. But from here, now started going up. Up. What do you notice? Which level was this that the market stopped selling and started going up? If you trace it down, what's this? This is 40. Remember we said uptrend that has started now. We are now using 40 and 80. Can you now see how the market reacted to 40? So it's telling you that this market is no longer selling, no. It is no longer selling. Start looking for buy. Before we were using 60-20, that downtrend. But now, the market has reached 40. The market is no longer weak. It's not dropping to even go below 40 to 20. It has got to 40 and stabilized. It wants to start picking up from 40. It's a warning, it's a sign that, oh, the market wants to start going up. And then start looking for buy. Now it has picked up from 40. It even passed 60. Can you see? That means that 60 held it, but just for a bit, because 60 is a resistance. It got to around 40. This would have been another sign for you, another level for you to buy yesterday, and it has picked up above 60. So as it is now, what do you do? Let me ask a question now, if you are following. Let's say the candle, the market continues going up like this, up, 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 okay? And RSI also follows it, up like this, till this place. Maybe 82 or 81, and you are seeing the market up like this. What is it a sign for you to do? Is it to buy or to sell? I want to see your answers on the charts. If you are following, okay? Now, it has not happened. I'm just asking a question. Let's say this thing has gone up like this, 82, and the market too has also gone up. What should you do? Should you buy or sell? Let me see our answers. Yes, thank you. So many of us we are following. Yes. So we'll sell. We'll sell. Why will we sell? Because it has gotten to that resistance, even though it's an uptrend, but it has gotten to that resistance that we expect the market to do what? To drop a bit. Okay. Now, if we should drop, it will now drop down, get to 60, now continue dropping again, now get to 40. Let's say the market to start coming down, coming down. You now reach here 40. What will you now do at this 40? Are you still going to sell or are you going to buy? At that 40 now that you see that it has dropped down, will you sell or buy? Remember, we are on an uptrend. You're working with 80, 40. At that 40, what will you now do? Now, this is the second question. Will you still sell or buy? Let me see our answers. Thank you. So we are following. So that's the concept. Yes, that's the concept. So what we'll do now within the next few minutes, okay? We already exhausted the 1 hour, but within the next few minutes, let's just backtest. Let's just see if this really works the way. These are not trend. You agree with me? This is a real uptrend now. Okay? Look at 40. I'll mark 40 and 80. 40, 80. By the way, this works on all time frame. What I'm using is 1 hour. Okay? Yeah, because that's what I'm using for this example. I can use it on the 4 hour, on the 5 minutes. So this is an uptrend, and we are working with 80 and 40. Let me just put it here. 40 here. 80 uptrend. Okay. So where the market, where this 80, this is not exactly 80, but almost 80. This is 40. And this is another, not exactly 40, but almost 40. What do you notice at this 40 level here? This is where the market was. The market picked up. That's buy. So you're buying here. Buying here. The market picked up. Here again, this is another 40. Yeah. You're buying. Remember that this is not the default setting of RSI. We changed it. Don't forget, RSI comes with 30 and 70 for overbought, oversold. But what we did is to modify it. Okay. If you're using your phone, Just double click on it. Okay, on the touch screen on the 3070. Double click on the 30, double click on the 70, change that 30 to 20, change the 70 to 40. Then you see add. Okay, click on that add 2 times for the 2 extra levels. Then you will now see 60 and what again? 80, 20, 60, 40. So just those four, just put it like that. Then I click OK. It will change it from that 3070 to 20, 40, 60, 80. Okay. So that's that. And of course, look at this 80 here. Look at how the market dropped. Now, one thing that you can do, you can decide to take only the trade in direction of the trend. Okay, so if the market is going up like this, as the market is going up, any buy signal, because the market is going up, meaning the market is buying, any buy signal will be more powerful than sell signal. Not that the market will not sell, it will sell, but it may sell small before it will come back to 40. It will now push up again, to now buy very, very hard, very well, because that's the overall move up. So you may decide, okay, I don't want to make mistake. Oh, this market has gone to 80 and it's giving sell, but let me just wait. It depends on you. You may decide to take it. You may decide to let me only follow the direction of the market. The one that I know that at least I have more potential for making money. So in another trend, you may say like this sell now. Let me clear this thing. This one now, this 80. Yeah. You may say, let me not take it. This one, let me just wait. Let me be patient until the market gets to 40. I mean, until RSI, sorry, gets to 40. When RSI gets to 40, you can say, yes, let me buy. Look at this push up all the way. Okay, just like here again, 40. Look at this push. Or you may decide to take it. It depends on you. It depends on you. The same thing with a downtrend, 60-20. You may say, since the market is selling, 60 is for sell, 20 is for buy. Let me not risk buying in a downtrend. Let me just ignore it. Let me leave it. And let me follow only the sell. In this case, when you want to automate it, you also add it at a set of instructions. You will see how you can do that to take trades in only one direction, only sell. In a downtrend, only sell. The buy it to switch it off. It's a software. Anything you tell it to do, it will do. Okay, so in a downtrend, you can tell it only take sell. It will just be taking the 60, 60, 60, 60, 60, 60. Any 20 for buy, it will ignore it. Or in a downtrend, it will just be buying from the 40. The 40, you understand? 40, 40, 40, 40. Or if you like, you take the both one, 40, the buy, the sell, the buy, if you want to trade both directions. Okay, so that's that for this first indicator, that is the relative strength index. Now, the reason why we are adding the second indicator is to now provide an additional filter, okay, to say, okay, this indicator alone, this RSI alone, I've studied it all and it's working. But let me now add another extra indicator to now confirm my bias. Like if you are going somewhere, maybe you are going to Oshodi, you don't know the way. You call somebody on the road, you say, Oga, please, I'm going to this address, Oshodi. Where should I pass? But it says pass right. If you just pass right straight down, you get to Oshodi. The way he's talking, you know that yes, this person knows what he's saying. He says, just go right, you get to Oshodi. And you continue going right. You see some other people. One mind will tell you, although this first man has told me that I should go right, that I'll get to Oshodi, but let me just ask another person. Let me just double confirm. If you call another person again, say, please, going to this address. That first person has gone, no, that you asked. This is a new, fresh person. Please, I'm going to this address, so place Oshodi. That person also says, just pass right, continue right. The same thing that the first person says. You are now very sure that, okay, yes, the two people cannot be wrong. Now, ask the first person, the second person, at least you are kind of sure that these people know what they are saying. As long as I go this direction that the two of them said, I should reach my destination. That is the reason why we are adding a second indicator, okay, to confirm our bias. So that second indicator that we are adding is, we said it's stochastics, okay? And I'll go to indicator oscillator. You see down here as stochastic indicator. And look at the parameter 533. That's what I'm using. And then, so let me reset it. 533. The method, if you notice, is simple. Simple. That is the moving average. Okay. You can try to leave it like this. Don't touch this one. Unlike the first indicator that we modified it. This one, just leave it. Okay. It will come under. So this is how stochastic works. What are we using stochastics for? We are using stochastic for overbought and oversold. Overbought, oversold. What overbought, oversold? Overbought, okay. Overbought and oversold, they are phenomenon in technical analysis that tells us either that the market is exhausted, the market is tired, the market has been going up so much, it's now getting tired. It will now drop a bit. That place means overbought. And people have been buying. At some point, there's no more person to buy. That's overbought. So that people will start selling. It's not necessarily a sign that the market will turn altogether and start selling, is now turned to downtrend. But just telling you that at that point, even if you want to buy, that's not a good level to buy. Market is too high. I like to come down first and then buy. That's for overbought. For oversold, that's the opposite. The market has been selling so much, dropping, but it gets to a level that at least it will pick up small. At that level is called oversold. For stochastic, if you look at these two levels here, let me mark them, the 80 and 20. 80, for anything from 80 up, like this to 100, is overbought. I mean, it has been buying so much. Let us start thinking of selling. And then 20 to 0, that's called the 80 to 100 overbought. Sorry, overbought. 20 down, oversold. So what we are doing is we are looking at this level here. For instance, let's just take this level as an example. Okay, here you will see that this is a support. That is 40 because it's an uptrend. At the same time, let's go and ask the second person too, the direction to Oshodi. What can you see? This is also oversold. That means telling you that it has sold so much that it should pick up. Okay, we've asked the first person that's giving us sign to buy. We asked the second person as well that's giving us sign to buy. Double confirmation. We are double sure. And look at the result. Okay, even this cell here, that it was close to 80. That's the year two. For this for sell. I'm talking of year up. You can see the markets here. When the market was here, we pretend that all this one has not yet happened. All this move now has not yet happened. We are just here looking at the markets. Okay? Just pretend as if we don't even know that the market sold. We are here now. Your eye come here. Look at RSI. Your RSI is almost in 80, and we are in uptrend. 80-40. It's 80 for sell. Let me even look at stochastics. What stochastic is saying. The second person. Where is stochastic? Or stochastic is also in overbought. That means it has bought so much. The market need to relax. You need to sell more. We may have two different indicators. Okay, two different studies telling you this. They are both telling you the same thing. This one says sell. This one says sell. At that point, you sell. And look at what happened. Look at how the market, at least if you sold from here up to it to down there, you can make some money. You now wait for this place again, buy. This one, because the market is in an uptrend, this one, you know that yes, I'll buy very well. Because this one, number one, is in an uptrend. Number two, RSI has told you buy. Number three, stochastic told you the same thing. You buy all the way up. And look at how the market moved. You can see that this system is very, very simple. It's not complicated. There are hundreds of strategies. There are hundreds of strategies. And one good thing about trading, this system, okay, is from my experience. Nobody taught me. I sat down and I noticed, look at 40, look at 80, look at 60. On your own, you may begin to use the system and you may find out that no, this is not 40, 45. 45 gives a better level. What am I saying? In essence, you can modify the strategy to fit your own system, that's you yourself. You can modify it that it will be even more effective for you than another person that is even using this system that we just showed. So feel free to backtest it. Feel free to demonstrate it. Okay, get used to it and tweak it. Tweak it to the model, the way that it works best for you. Okay, the one that will give you the best results. Feel free. Okay, so this is the strategy that I said I will show you. It has no name. You can give it your own name. You can give it, well, not EBCO, it's not from EBCO. It's my own personal strategy that have worked for me for a long time. Okay. So with I know for those of us seeing this for the first time, we'll have questions. Let me just take question, just two questions. Two questions. Okay. And then I'll hand over back to my boss, my colleague, Mr. Sodiq. So if you have questions, just type it within the next 2 minutes. Okay, we've already overshot our time. So just within the next 2, 3 minutes. If you have any question based on this, if it's clear, fine. Okay. The next step will now be how to now automate it from what you said now, what you've seen, how to now take this and build it, convert it to a software that will trade for you. Shikena, that's what we'll learn tomorrow and Friday. Okay, so that's that. If there's no question, I'll hand over back to Mr. Sodiq Dayo. Thank you very much, guys.
Yeah, thank you, Ayodeji, for such beautiful analysis. So, it's such analysis we'll be learning on how to code tomorrow by Mr. Precious. So, I would say we should all be present for it because it's going to be a very, very interesting class tomorrow. So I'm going to run through the concluding part of my slides before I hand over to Mr. Precious himself. And we'll be looking at the risk parameter, risk parameters. All right, so per trade, initially I told you per trade, is usually within 1 to 2% of equity, which is always very important for us to do so that we preserve our capital. So we should always also have daily stops and equity stops, add equity stops in case we're having a very irregular market condition. So our key takeaways for today. Sorry about that. I'm struggling with my screen right now. Okay, guys. Yeah, can you see my screen now? Please, can you indicate? Okay. All right. So our key takeaways for today is all about efficiency, psychology, and caution. Yeah. So it's we've learned how automation can bring about an unmatched speed and 24/7 opportunities, while removing emotion is the biggest edge a trader can have. And technology requires supervision. Don't trust, you verify. So that will be all for today. And I would like to ask, is there anybody that might have one or two questions to ask? So before handing over to Mr. Precious. Yeah, you can drop your question on the chat box while I hand over to Mr. Precious, because we're already running out of time and I don't want to, I wouldn't like to keep you very important people waiting. Yeah, so Mr. Precious, please, you can take over from here. It's been a very interesting journey today, having you guys attend this beautiful forum. And Ayodeja and I are glad we can present to you, and we'll always be there at your service. And any questions and answer will be any questions will be glad to actually answer them. Yeah. So, Mr. Precious, please, it's handed over to you.
All right, ladies and gentlemen, it's been a very wonderful time. I want to appreciate Mr. Sadiq. I also want to appreciate Ayodeji for taking us on this. Tomorrow, we're going to be taking it a step further, a step up. Tomorrow, where personally I'm going to be talking about automation, how, for example, the strategy that Ayodeji talked about, the RSI strategy, we're going to be seeing how to automate it tomorrow using ChatGPT, and doing the back tests, giving us the results. So without wasting much of our time, I want to appreciate everyone who has been here. Tomorrow, same time, we're going to be meeting by 11 o'clock. And don't forget, later tomorrow, also by 4 p.m., we're also going to be having an advanced class, the secret of consistency. All right. And then by Friday, we're going to be concluding it with Mr. Obina all the way from Abuja. Let's have a wonderful day and God bless us all. And remember, I'm going to be posting the recording on the record of this video on YouTube, so you can always watch it on YouTube. Fantastic day ahead, everybody.